Was always the goal, always in mind, right? It was get as many cars on the road as possible, prove the technology, and then open up and license it to everybody. The reason why they're cutting pricing is they want EV penetration to increase. If your neighbor has an EV, you're more likely to buy one as well. The real denominator here is ICE cars. And opening it up actually increases EV penetration and also increases the chance that you'll see that their software is probably the best, if not one of the best, in the entire group. And there's only a handful of folks that are really doing this. And so this industry, robotaxis, could be multiple $1 trillion of opportunity. And these guys are one of a handful of folks who are actually doing it.
Today, we're taking a deep dive into the heart of one of the most captivating topics for any Tesla investor. Several Tesla bulls and even analysts like Tom Narayan have analyzed the transformative forces that could propel Tesla shares to stratospheric heights. The very reason why investors need to be prepared to witness an astonishing rise in Tesla's stock price in just a few years, and why 10 Tesla shares right now could be worth many more folds in only a few years. This could be the ticket to financial abundance for most investors. So maybe it's long-term investors stop focusing on the short-term noise and then concentrate on the long-term trajectory of the business. No doubt Tesla's performance has been remarkable, and its stock could be just the opportunity that would change investors' lives forever.
It's time to check in on all things Tesla, as it is still the third best performing in the S&P 500 at least a year to date, with a rally up around 110%. And I spoke too soon saying shares were lower because now we're slightly higher on the session, but breaking that 13-day winning streak. So here to tell us more now on some of the recent price activity and this really optimistic note we got out of Wedbush's Dan Ives, Ben Lichtenstein here to tell us more. Ben, walk us through this, because I saw Dan Ives calling this an AWS moment for Tesla.
Yeah, big time. I kind of hear that in my own mind in like a Dick Vitale voice almost. Dan Ives rooting this one on. But let's get into what's playing out here in terms of how this is an interesting stock, not only from the fundamental, but also from the technical perspective. We can get into that in a few minutes. A couple analyst notes, as you mentioned, on Tesla making headlines today. We did hear from, RBC Capital raising the firm's price target on Tesla to 305 from 212, keeping an outperform rating on shares of TSLA. RBC is actually modeling the company's autonomous driving, as a separate business. They see the leading full driving software offsetting some of the margin dilution we've seen from lower price models, and they say it's positioned well as they transition into a software business. Now,
with the global EV market set to expand as a compound annual growth rate of 18.2% through 2030, according to recent data, Tesla looks to be well positioned to capitalize on the rising trend. Tesla is an incredible firm by any measure. Take its financials. In 2022, the company produced $81.4 billion in revenues from selling 1.31 million vehicles, a 158% rise in revenue from 2020, and a 20-fold increase from 2015. For this reason, analysts expect the EV maker to generate 24% growth annually through 2025. Hey guys, welcome back to Tesla Tomorrow. A few things have got to happen for Tesla over the next few years if it wants to get a leg up. According to ARK Invest, if its forecast goes well, then Tesla's stock price will be as high as $2,000 by 2027. And while this may seem like a very high prediction, the good news is that the pieces are all in play for this. If you had bought 10 Tesla shares at its peak back in June 2021, then you would have paid $6,940 for these shares. And by September 2022, you'd have 30 Tesla shares worth close to $8,000 post-stock split price. That's a whopping $1,000 profit in less than 2 years. Tesla has very promising fundamentals, and this has been very evident way before now. Therefore, investors could earn even more by holding onto these shares for a longer time. So how much profit can you make in a few years by owning just 10 Tesla shares now? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe to our channel, and turn on notifications to keep up to date on everything happening with Tesla. ARK Invest's bull case requires Tesla to outdo its competition in the autonomous vehicle space and scale internationally. It would need to expand its portfolio and vertical integration, as well as its solar holdings and insurance offerings. Hopefully, Tesla will also be mining its own lithium by then. In a recent estimate, ARK Invest predicted an increase in Tesla's insurance program over the next 2 years. The firm stated that if Tesla underwrites more of its own insurance and uses the real-time data collected by its cars to assess risk, it could achieve a lower customer acquisition cost and hit margins as high as 40%. Insurance revenue could also bank Tesla an extra $23 billion annually. Similarly, if Tesla were to dabble in ride-hailing, it could achieve a lower cost structure than companies like Uber and Lyft, and this could potentially increase the company's operating profit by about $20 billion by 2025. ARK's previous model gives Tesla a 50% chance of offering fully autonomous cars in just 2 years. The report says that if 60% of its autonomous vehicles were robo-taxis, Tesla would have an extra $160 billion EBITDA by 2025. However, a more recent prediction by the investment firm this year stated that Tesla's FSD Beta will someday support a fleet of robo-taxis, and the autonomous business would likely be a key driver of $2,000 expected value estimated on the stock. Therefore, if ARK's valuation on Tesla is correct, Tesla shares, 10 of them specifically, which only cost roughly $2,600 at the time of this video, will be worth a whopping $20,000 in just 4 years. Although there are still periods of wide fluctuation in the stock price owing to growing competition and major problems in China, things are looking quite positive for Tesla. After ending the first quarter of 2023 as the world's best-selling passenger car, the automaker's Model Y has continued its spectacular sales growth in the United States as well. Tesla's best-selling model doubled registrations to 127,541 in the first 4 months of 2022 over last year. This record performance means that the Model Y is now outselling popular cars and SUVs that have dominated the sales charts in the past. Experts have also said that Tesla's creation of a vast new EV charging business will be a massive boost for its valuation in the future. The car company has taken this bold step in order to build its own network, not to start turning a charging into a profit center, but rather to reassure buyers that they could get across the country without running out of power. This charging business is starting to boost, and it could become a significant revenue source for Tesla. A recent analyst from investment bank Piper Sandler found that in about a decade from now, Tesla's efforts to open up a charging network to other car manufacturers could generate the company upwards of $5 billion in revenue annually. Likewise, Jonathan McNeil, a former Tesla executive who now sits on GM's board, said that this is a bit of an AWS moment for Tesla. He claimed that Tesla is taking something that's been a cost burden for them and turning it into a revenue source. Furthermore, at the root of Tesla's stunning performance is an army of supporters. Fans of the EV firm care little about its quality control issues and controversial CEO. Instead, they see Tesla cars as alluring for their styling and performance, and the fact that they're new and different. It's impossible to know for sure when Tesla's going to surpass that $2 trillion market valuation, but given its superior positioning in a massive secular growth industry, it's fair to say that the company will eventually reach that point. And even in the case of a pullback, it should only serve as a nice window of opportunity to acquire the stock, especially considering that Tesla's business continues to expand at a rapid rate. How many more Tesla shares are you adding to your portfolio? Let us know down below. And if you want to know more about these groundbreaking moves that Tesla's been making in the past few days, then go ahead and click on this next video on your screen. See you there.